Today we're going to talk about workers' compensation insurance for hedge fund managers. For a startup hedge fund, you may not need workers' compensation insurance if the only workers are the owners, partners, or officers. In New York, the rules for partnerships, LLCs, and corporations allow executive owners of a company to be excluded or to opt out of workers' comp. Other states can vary from this, but that's pretty standard generally speaking. What you really have to be aware of is when you make your first hire, you will need workers' comp to be in effect, to be in compliance with your state's rules on workers' compensation coverage. Many new and smaller funds will often bundle their workers' comp with payroll and/or benefits with a PEO or a payroll provider, and this is fine. We work with a few firms like TriNet and ADP, and if that's the route you'd like to go, we'd be more than happy to make a referral to one or more of them to keep them in the loop on this conversation. Bundling workers' comp into your payroll or into your entire human capital management framework does make sense from an ease of doing business perspective, and as a startup fund, a lot of decisions are driven by ease, and rightly so. But what about larger, more established firms, or when you grow and have more employees? Does bundling still make sense? It may, but you need to know that ease of doing business does cost more in the form of fees you pay to your provider. You're also putting an insurance product in the hands of a company that isn't solely in the insurance business. And as a larger firm, having insurance handled by an insurance expert makes more sense, at least in my opinion. In many cases, we can do the pay-as-you-go type premium installments, but more importantly, we can make sure that your coverage is done right and kept up to date. Too often, I have found errors made by PEOs and payroll providers which can have costly repercussions for the insured firm. By having an insurance expert handle this part of your insurance program, your hedge fund will be assured of having the right protection. One of the most common questions I get from hedge fund managers is, should I include or exclude executive officers, partners, or members from our workers' comp policy? My answer is include them. The premium savings you get from excluding them is negligible in the whole scheme of things. Even very highly compensated individuals have executive payroll capped at around $100,000 a year in workers' comp, and the rate for executive officers is very low. And if you think that a work-related injury isn't going to happen in your office, think again. We've seen plenty of claims for financial service professionals injured on the job. Some are simple first aid type injuries, but others can be complex and costly. Like ergonomic issues like carpal tunnel syndrome can be very expensive to remediate. I often hear, well, we have a great health insurance plan and we don't need workers' comp. Think again. Health insurance plans exclude claims from work-related injuries. Yes, sometimes small claims like this will slip by your health insurer, but a large claim, again, like let's say carpal tunnel, will be caught by your health insurance company's screening process and it'll be denied. Then what? You're paying for that claim out of pocket. Not a great scenario. Here's the bottom line. Workers' comp will cost your firm about $250 a year for a high-earning executive in New York, and in most other states, probably less than that. In my opinion, it's not worth taking the risk and excluding these individuals from your workers' compensation program and possibly ending up with a large out-of-pocket claim that could run into the tens of thousands, if not hundreds of thousands of dollars. Workers' comp is just one part of a protection program we cover for hedge funds. To find out more about how we can help your fund, whether you're a startup or an established fund with all your business insurance needs, please contact me for a conversation. Hey, and if you like this video, give it a thumbs up. Thanks.